Okay, so thanks to everyone for tuning in. Well, this will be the last talk from our business society of the academic year. I think a lot of people are getting tired of the Zoom format, but it's exactly Zoom, which allows us to have guest speakers like Masha speaking to us from Moscow in a New York-based company. Masha is the director of acquisitions for Masterworks, having worked at Citibank, and as an associate vice president at Christie's Auction House. Masha has extensive experience in art market research and financial modeling. During the talk, if you have any questions, please post them in the chat or make use of the Q&A facility, and Masha will try and get around to answering them, time allowing, at the end of the presentation. Thanks again so much to Masha for coming to talk to us, and without further ado, I'll hand off to you for the presentation. Thank you.
Oh, thank you so much for that wonderful intro, Aiden. As you mentioned, yes, I am in Moscow. I normally work out of New York. It's probably along with London, one of the more interesting cities to be in for art. So I'm very excited to be speaking to UCL. I had a friend study abroad. So one of my first visits to London was in college, and I stayed and crashed in one of the dorms there, and I have very fond memories. I'm sure you all are happy to, I'm assuming you're back on campus, and I'm sure you're happy to be there. London has an amazing art scene, and so I hope I can add a little bit of texture to what the art market looks like, and what maybe give you some ideas for non-curatorial gallery paths after you graduate, and just a better understanding of the art market as a whole, and then a little bit of an insider view into what we're doing at Masterworks.io and why we think it's super exciting. So here's just a brief summary of everything I'll go through today. I don't know what everyone's background is. I think it's super exciting. Aiden mentioned that he studies physics, that people are coming here with a different basis. And so I'll just cover the basics of the art market so that we're all on the same page. And then I'll talk to you a little bit about the research that we've done at Masterworks, and also the research that has been done by some institutions and academics about art as an investment. And so that will lead us to explain where Masterworks can add value to investors and to the art market. I'll walk you through a couple case studies. I'll walk you through how we have a secondary market on the Masterworks platform. And then I always get questions about art lending. So I'll just touch on that very quickly, because I think it's a different entrepreneurial area within the art market that's growing. And I'll wrap up by doing Q&A. So with that, I'll go ahead and flip to our first slide. So really quickly, Masterworks.io, or briefly Masterworks, I've been there for 3 years, and it's a fine art investment platform. We're fully based online. We have an office in Soho and a kind of a smaller exhibition space, but we are basically a community of people interested in investing in blue chip art. We're the first ones who have done this in the way that we've done it. And we're, the leader in this space because we're the first ones to really bring blue chip art to investors in an accessible, to retail investors in an accessible manner. So we've been featured, and we're really excited to have been featured in a number of leading publications, which you can kind of catch a glimpse of below. And I'll tell you a little bit about the art market now. So we'll go over the size, what it looks like globally, and go through some of the data that I mentioned earlier on returns. So it's an estimate, and again, these are estimates. It's hard to say exactly how big the art market is, because unlike stocks, you don't have a public record of each and every artwork, and the pricing isn't being updated on a daily basis through public trading. So based on estimates from Deloitte and Sotheby's, we believe that there's about $1.7 trillion worth of art in private hands. And this is unfortunately a year old, and the new Art Basel report was just released. Of course, sales are down with, last year being obviously a change in business as usual, but in an average year, we see around $60 billion in annual art market sales. So of that, about half is private and half is auction. So the auction market is exclusively secondary market, and that's really where Masterworks plays. And of that, 17.1 billion is in artworks that are valued over $1 million. And so if you think about where Masterworks lands, that's really in this category of secondary market sales for paintings valued close to $1 million or over. We don't exclusively buy at auction, but that's just to give you an idea of how much of the annual turnover as a whole is really represented by these high value artworks. And so when you think about the market, there are the public sales and the private sales, and the public sales are made up of the major auction houses. I, by the way, hope that all of you know that at Christie's, Sotheby's, and Phillips, once auctions are back in session, if you're not trying to go to an evening sale, they're open to the public. So most likely, I don't know if it'll be as early as June, but in the fall, when the auctions are most likely back for the day sales in post-war and contemporary, you should all go and sit in a sale room and actually see how the auctions are conducted. And you can get a sense of how that market works. It's a little bit more opaque in the private sale market, and that's comprised of your leading art galleries who go to art fairs, also private dealers. And we're not just talking about secondary market sales, we're also talking about primary market sales in that category. And primary market means it's the first time something's ever been sold. It's really something that's coming from the artist, usually through an intermediary of some sort, but effectively directly from the artist to the collector, or the initial buyer. So we can think about the core collecting categories as post-war and contemporary, impressionist and modern, old masters, and then we have some more regionally focused categories where you don't necessarily have the same overlap that you do in the top three above in terms of collecting internationally. But post-war and contemporary has by far seen the most growth in the last 2 decades. Really, the impressionist and modern had, in the 80s, had a big growth cycle. And then when there was some turmoil in the Japanese economy, you saw that come down quite a lot. And so the 90s were a very quiet decade in the art market. In our research, we really didn't see, the 80s were really buoyant and there were a lot of exciting things happening in the 90s. If you think about it, were really the best time to buy post-war and contemporary. And since then, that category has really led the pack. And so the way that Masterworks thinks about the art market is in terms of the allocation opportunity as compared to other asset classes. Of course, art should be appreciated, and we do appreciate art for its aesthetic and historic qualities, but it's now very much an asset class. Independent of us securitizing it, it's been now used, and I'll touch on art lending in a little bit. Basically, collectors have been using it to leverage their collections, take out cash against art. It's been considered a financial asset by leading banks when looking at the portfolios of their clients and wealth managers. And so when we compare it against private equity, gold, public equities, of course, it's really small when compared to public equities, but it's about half the size of what we estimate the private equity market to be, and larger than the private debt market. So you can think of this as being a very interesting asset class, and in terms of the fact that it hasn't really been tapped yet to its fullest potential. And when we're talking about it, you can see here in terms of what I just mentioned, that ultra high net worth individuals, So people with a portfolio, investment portfolio of $30 million and up, allocate on average 5% of their portfolio to art, whereas institutions right now allocate 0. And so that we see as being the biggest opportunity, because compared to all of these other asset classes, even if you think about gold, which is a hard asset, and nothing is really tied to gold anymore. We're not on the gold standard, but there's still a 4% institutional allocation. So if you think about, if you even allocated 4% to $1.7 trillion worth of art, how impactful that would be for the art market as a whole. And so we think the art market is also really interesting because it has some interesting qualities of not only being a hard asset, domestically, but it hedges against cross-country currency effects. And so I think here is a really good representation of where we are effectively today, with North America having the largest share of the art market, and Europe having the second largest share, led of course by London. But Asia is now at 370 billion, and that's really the number one place where we're seeing growth. And if you follow the auction sales closely, there used to be, a couple sales in Hong Kong, and now for effectively modern art and post-war and contemporary art, there is now a sale that effectively follows the sales in London and New York in the auction calendar. And that's really a testament to the buying power in Asia. So now I'll just touch on art as an investment and why Masterworks believes that this is an interesting asset class to allocate to, if outside of the fact that, a lot of, there's $1.7 trillion worth of art in private hands. You really want to see some sort of growth in prices to think that, and some sort of metrics around the correlation with returns in other asset classes, to think of this as a strategic part of someone's portfolio. And so really what art is driven by is an imbalance between supply and demand, right? It's when we have a more interest in a given artist or group of artists than we actually have artworks. And especially for artists who are now deceased, it's a fixed supply. So as works are absorbed by museums, or occasionally, and very unfortunately, there are situations where paintings are outright lost or destroyed. There's an interesting situation where the supply actually shrinks over time as works go to permanent collections of museums. And we believe that the scarcity effect is really what, along with the growth in the overall wealth of ultra high net worth individuals, really drives the demand here. So touching really quickly on the financials of effectively this is the growth in the global ultra high net worth community against our index for post-war and contemporary art. You see that up here from 2011 to 2018. And so you can kind of see that there's a correlation between the overall growth in ultra high net wealth individuals spread across the different regions, correlated with the growth in the demand for international post-war and contemporary art. And so here I touched on, again, the decreasing supply and circulation of artworks. These are just a couple of headlines that, are around museums that are spending top dollars to acquire, in this case, an old master's painting, but really it's the fact that there are so few Rembrandts left of high quality in private hands that are driving these really significant prices. So how did Masterworks come to understand the art market performance, and how have we gathered information? We actually, in order to complete a research project, we basically had 30 researchers working. They were collecting data around same sale pairs. It was basically a 6-month process to allow us to collect 3 million data points and construct our own indices that are very similar. I don't know how many of you have heard of the May-Moses Index, but effectively we replicated a lot of that and also improved on it in ways that we felt was appropriate given our focus primarily on post-war and contemporary art rather than all of the collecting categories. And here you can see on the right, we basically have small thumbnails of actual dashboards that we use that track artist momentum, that track returns for individual artists to assess which artists we believe are the right ones to invest in for our platform. So if you look at since 1995 at the total returns of the S&P against the contemporary art annualized return, which was calculated through July 30th, 2020, based on the same sale pairs index, you can see that contemporary art has really soared. And there is, of course, a correlation in 08, 09. The index dropped by about, I believe it dropped by about 25%. At the same time, the S&P dropped by about 50%. Sorry, just want to make sure that wasn't for me. And in looking at the correlation, we can basically complement our understanding of annualized returns with our understanding of how the art market performs compared to the stock market. And so we actually see very low correlation with equities, both S&P and global equities. We see a slightly negative correlation with US housing, and we see a higher correlation factor with a hard asset like gold. There we go. And so I won't belabor this point too much. We just look at a bunch of different metrics. We look at how many times in the last 3 years an artwork has sold for less than it was originally purchased for. We take into account a number of different metrics. Here's a report, just a quick snapshot of a report we worked on with Citi. And I think, without getting caught up in these numbers, all of this is to say is that we have put in a lot of energy and time into actually understanding art as an asset class so that we could make a strategic case for why it belongs in someone's portfolio. If it wasn't in somebody's portfolio and they've never invested in art, as most of actually the people signed up on our platform have never done anything in the art market before. If they're investing in art, it's really a lot of our job is to really educate them on the art market and what art looks like as an alternative real asset. And so you're getting a flavor here of everything that we've put together to show investors and institutions where we believe the art market is going and where it has been historically. So 2020 was a really interesting year. These are just statistics from the first half of the year, which the resilience was actually incredible. There were usually, I mentioned the way that auctions happen is in February, the first auctions of the year take place in London. And then in May and in early, basically mid-May, and then later in May and early June, you have auctions in New York and Hong Kong. And those are the marquee sales and collectors fly in for those. And it's the closest thing you have to really a bellwether for the art market is watching those auctions. And in the middle, there are also these mid-season sales, smaller sales that often have property that reaches over $5 million. So when you effectively only hold one of the 3 largest auctions for the first half of the year, of course, and you come back at the end of June and you effectively have to do everything online and digitally, going into June, the auctions in June 2020 when they resumed, there was a lot of uncertainty, and it was actually incredible. I don't want to misspeak here because I don't have the numbers right in front of me, but I believe there were around 16 new artists records set in those first auctions back. And so I think that just speaks to, the fact that interest in the art market and art really being viewed, not just as a beautiful, wonderful piece of someone's collection, but really as an asset and somewhere where ultra high net worth people want to continue putting their money in times of uncertainty, really reassured us, at Masterworks that yes, this is an asset class that's important for investors who want to diversify their portfolio to be in. And so the other effect that this had is because all the sales went online, we actually, according to Christie's and Sotheby's, according to Credit Suisse, based on surveying the auction houses, there are 40% new buyers in online auctions. So an incredibly and surprisingly strong year for the auction houses, given, of course they didn't beat their 2019 numbers, but given how 2020 started out, I think everyone's really impressed with how it turned out specifically for the secondary sales. And so here I'll jump in. So basically I've given you the overview of the art market from a really financial standpoint. And so I'll now turn to what we're doing at Masterworks and how we securitize art in order to make it available for investment. So how Masterworks operates. We select individual artworks. Here's like a cute little thumbnail and number 1 of a Picasso. I believe that would be a Marie Therese. And we basically source individual artworks and we place that artwork on file with the SEC. And effectively, once it's qualified by the SEC, we offer it as effectively an IPO for an individual painting. And this is really cool because for a number of reasons, but primarily because it allows us to allows us to open up this investment to retail investors. And retail investors in the world of finance means that they're individuals who are non-accredited or non-institutional. So to be an accredited investor, you have to meet certain metrics. For example, you have to have $1 million, minimum $1 million investable portfolio, excluding your primary home. And so that's a fairly high threshold. And so we wanted to make this much more accessible. And so by making this a Reg A security, we can take investments basically as little as $10,000. And so the other thing that's really cool is that oftentimes when companies have tried to run art funds and basically raise money around art as an investment, usually they've done it as a black box where you write a check for $100,000 and then we tell you later what we bought. And this turns that model on its head. We acquire the painting and investors know what that painting is. We show them the timeline of how the work, comparable works have compared over time. And I'll get into that a little bit later. And we're allowing people to invest in an identified asset, which I think is really why we've been successful in bringing in new people to the art market. On our platform, very, very few individuals collect artworks. I would say probably fewer than 10 and have any experience in the art market. So I think for, just the the importance of actually showing people beforehand what they're investing in, rather than saying, oh, we intend to buy a Picasso and not tell them what the actual artwork is crucial. And so then once the offering is fully subscribed, that means, if it's a $2 million offering, we've raised $2 million from investors. Then 3 months later, we put the offering, the painting, on the secondary market platform, which for us means that it's a bulletin board structure where you, as the owner of, let's say, 100 shares in a Banksy, can say, I bought these shares for $20 a share. I want to sell them for 25, and somebody else can come and counter offer. So we intend to hold the paintings for potentially up to 10 years. We believe, we advise investors that this is a long-term holding period. However, we've given them this option for liquidity, which we think is super important. And so investors effectively have the option to either sell their shares on the secondary market platform, or wait until we eventually sell the painting and distribute the proceeds accordingly. And so with that, Aiden, I'll turn to the next slide, where I'll go through how we select artists.
Masha, sorry to interrupt, shall I just pause the recording now?
Yes, let's do that. And I'll just go through some of our more, some of the actual offerings that we've done.
Sure.
So I'll say a few words on art lending. And I think we wanted to end closer. We want to make sure there's time for Q&A. So I'll leave the slide up and just say a couple things. And then if you have questions, I'm happy to answer those in the Q&A. But basically, art lending, there are a couple firms that are now playing heavily in the space, and a couple of big banks that already have the book of clients are now realizing that they can use this as another way to strengthen their relationship and provide, in a really low interest rate environment like you have in the US right now, provide a really valuable service to their clients. And so what happens in art lending is that either an individual work of art, but more frequently a collection, are used as loan collateral. You can think of this analogously to how, you take out a mortgage, right? For a home, it's a physical asset. Of course, art can be a little trickier to track down if something goes wrong. But effectively, to mitigate some of the risks around art lending and the variability in pricing, what art lenders do is that they lend at most 50% of the artwork value. So hypothetically, you have a $3 million collection, US Trust will lend you $1.5 million. And so a number of companies have come in to work on this. Banks, auction houses also do it. Sotheby's, SFS has built a very good book of business. And of course, for them, it's a really natural way to deepen client relationships for people. And if something goes wrong, they have the advantage against most other lenders that they can actually liquidate the works. Let's say you default on your loan, you were notified that you're due to pay, etc. And so, SFS has done that very, very well. But it's an asset, but it's an evolving area of art finance. And I think we'll see more in that space. I think we'll see more companies, looking at how they can invest in art. We don't really have any competition yet, but I'm sure, competition is quite natural, and I'm sure we'll see something down the road. And right now in the art lending space, I think we'll continue to see interesting innovations, and it's something that's happened in the last few decades that it has really helped art collectors tap into their, collections as an asset. And it's further the case that art, people don't just have this to appreciate, it is a real tangible financial asset. So here are, 4 categories of lending. And now that I've kind of given you the overview of the art finance space and Masterworks, I'd love to open up for questions. Aiden, I'll look to you for how you want to do that.
Okay, thank you so much. Very interesting to see Masterworks' breakdown of the market. I would like to start with a few questions of my own. I'm quite interested to know a little bit more about the life of the art in between Masterworks purchasing a work and selling it. I would like to know where it's held. You mentioned that you had a gallery space in New York. Would that gallery space, for instance, just be accessible to people who have shares of the artwork?
Yeah, that is a really great question. So the gallery space is open to everyone. We actually are moving out of it, unfortunately, at the end of July. So most of our works are actually held in storage. However, we've only been around for 3 years. So as we're building out the platform, we're actually now working on loans. For those of you that get a chance to go to Amsterdam in the near future, 2 of our paintings are on loan to the MoCo Museum, a Banksy and a Cause. If you're going, you see my email up here on the screen. Let me know, send me pictures. That would be super exciting. And the monkey poison, we bought it from the museum. We bought it at auction, learned later that the museum had sold it to effectively fundraise because of the pandemic situation. So we reached out and lent it back to them. That's of course something, that we feel really good about. We also put another work on loan to them, and we're exploring different options to lend our artworks. That unfortunately hasn't been a focus because we are growing. There are now 60, 70 people in the business. When I started 3 years ago, there were about 15. And, we're right now focused on growing the platform, and we're loaning works opportunistically, but most of them, our number one priority is ensuring that the paintings are in, when we go to sell them, in the same, if not potentially better condition than when we bought them. So we, for the most part, are storing everything at a tax favorable warehouse.
Okay. So the other question I had, which leads on perfectly from that, was so looking forward to the future of Masterworks as the business grows and as the market grows, as people realize that they can take part in a market they were previously iced out of because they simply just don't have the amount of capital, the amount of money to invest in art. Say you offer an artwork and 50% of shareholders are from London, for instance. With ownership, I would think comes some sort of say in what happens to the artwork. I don't know if that's how the contracts are assembled for Masterworks, but would there be the potential for shareholders to be able to vote on, for instance, which museum it would be lended to? So in this case, 51% of shareholders vote for it to come to their own city so they can see it at the Tate, for instance. Is that in the future for Masterworks?
So listen, if anyone knows the curators at the Tate, I'm sure we could work something out with an art loan. But the thing is, with the art market has a lot of idiosyncrasies and nuances, as does anything, but a major, and I know this from my time at Christie's, and I know this definitively working at Masterworks, and we've had one sale so far, is you have to make decisions very quickly. And so if we had a voting structure, we would basically, I can't prove this, but I would venture to say that we would never be able to make a successful exit happen. Because if, somebody approached us and offered us I'll use this in a sale capacity, but basically offered us X amount of money for a painting, and then we had to put it up for a shareholder vote. And that's to some extent, public information. And basically then other people in the market know what the offer was. Long story short, it would make our actual goal of returning, our fiduciary responsibilities to shareholders impossible to fulfill. We would love to put paintings on hold. I think it's really interesting to have a fully democratic process where everybody gets a say. Unfortunately, it's just not practical for the art market. It's I wish it were. It's just we act on behalf of the shareholders, and we take, on the offerings, we take a 20% carry over the offering price as part of our fee. So our interests are fully aligned with the shareholders of the work. If we believe that it's a good return and the right time to sell, that's when we sell the work.
Okay, so that leads in well to a question from JB, who asks, who makes the decision as to when to sell and why?
Yes, so when I talked about the art market in broad strokes, if I had more time, I would have gone into individual artist markets, and I did a little bit with Morgan Kusama. But basically, where we on the acquisitions team are really tapped into the artist market, and we on the ground know who's moving, are the prices moving? Is this, is right now, is this an artist that either somebody is looking for a painting by, or whose prices have gone up? Let's say somebody just paid a record price for a painting, and we have the sister, let's say the sister example, and that to us is a signal that we should explore a sale. At the end of the day, it's really us on the basically acquisitions team effectively also functions as part of the de-accession process. And we've right now only had one exit. And of course, that's because most of the paintings that we own have been purchased in the last year. But that exit, we returned 32% net of fees to investors. So that was a really strong result. And we were super pleased that it effectively served as a proof of concept.
Interesting.
And I think a major point I missed there was basically, it was a Banksy work, and we saw, since we purchased the work, we saw tremendous growth in his market, and we got a proactive offer, and it was a great offer. And so we made the decision to sell, and it was absolutely in the best interest of the investors.
And just how long was it between initial purchase and sale?
From when we closed the offering, which was probably a couple months after, or maybe a month after purchase, that was exactly 1 calendar year.
Okay. Okay, so we have another question here about online sales. And just say when you don't have any more time for questions. And the question is, hello, do you think online sales will be a trend even after the pandemic, or actually social activities are also essential parts of the sale? Does age also affect the I'm assuming value? Does age of the buyers also affect what I'm assuming he means the value? Is there many new buyers under 40 buying online? So I think it's just a question about who's buying online.
The demographics
of
exactly. Who's buying online.
Mm-hmm.
Yeah, so what the auction houses did for the big sales, where you have, 20, 30, $40 million paintings, is they effectively opened the galleries up so or for somebody, often collectors will send an advisor to go see something, or a conservator to see something in their place. And, it was basically an online offline hybrid where you would see the work in person, So for example, I'll just use us as an example. We've been in the sales, we bought some works in the sales, we physically saw them in person. But when the actual sale happened, we bid on the phone and we saw the people on the TV screen, effectively our computer screens, versus being in the room with a paddle. I personally love that format, especially when, we are very numbers focused and kind of sometimes regroup on decisions and have last minute changes in our bidding strategy. And so not being in the room, having to be on my phone, texting with the team or with our founder about it is much easier. Basically having the computer following the sale and not actually being in the room for it. And I actually think there are probably a good number of people that really enjoy the online format and don't feel the need to sit in the room. Other people, for them, it is a big social event. They love sitting in the room. They love the ceremony of it. They see people they don't see for 6 months out of the year, a couple months out of the year. So there is some social component. Just speaking from a personal perspective, I see the people I work with, in other situations. And I personally, I think art fairs are really the big social event for the art market. It's the closest, it's effectively like a very luxurious trade show, right? You have every big dealer and they present the best works that are on the market. You have all the collectors there. You have, everyone from the auction houses come. So it's, the social things, social aspects of the art market are wrapped up in auction sales, and a lot of online sales aren't fully online. Most of the time there's an online sale with, Sotheby's actually, I believe, did a few sales where they sold things kind of as is in situ without actually bringing them to the auction house. But most of the time that's not really happening. Most of the time it's an online sale. They actually have the property in-house and you can see it if you want to before you bid on it. But I do think a lot of people are bidding without seeing the works themselves, especially when those sales are happening during lockdown. And I don't fully know the demographics of who, age-wise was bidding fully online, as in without, not over the telephone or just on works fully online. I have no idea what the demographics are, but I'd be remiss not to touch on the kind of NFT craze. It basically, by offering now, effectively digital artworks through a digital medium, I would guess that, most of those people are young crypto people who aren't art collectors, that are the new people bidding online and on that specific type of artwork. Very different from someone who would, bid on a Tracy Emin in a mid-season online sale online, right? That could be anyone. That could be a dealer, that could be a private collector. No idea what their age would be. If you're talking about people who are bidding on, like the new trend in digital art online, those people are probably young and crypto focused, not, collectors in our traditional understanding of that word.
Yeah, well, to me, it seems like after the whole crypto bull run, a lot of people are looking to move these gains into, the most obvious, as a crypto holder, the most obvious thing to buy in the art world would be digitally native artwork. So I think that is probably, has something to do with the growth in the space.
I think it's kind of interesting because 3 years ago, when crypto was at its previous high, we saw a similar craze of making everything blockchain related.
Mm-hmm.
So it'll be interesting to see which artists and platforms actually, have longevity in the space. And I'm sure some will. I just don't think it's going to be everyone who has jumped in to create effectively, in some cases, what functions as a collectible.
Mm-hmm. Yeah, I agree. I have a question from Dimitri, who asks, is there a cap on how many shares someone can buy on the artwork?
I feel terrible for not checking my notes beforehand. I believe it's 20%.
Oh, there is. Okay, so you
there
can't.
is a cap.
Nobody can be a majority shareholder.
Exactly.
Okay.
Exactly.
Sorry, I was just muted. Excuse me. The next question is, masterpieces might be prevented leaving the countries with the funds from museums and the public after the sale. Do you think this also reduces the buyer's desire to buy masterpieces? I'm not sure.
So there are some, yeah, I can speak to this a little bit. There are some countries which regulate the export of nationally significant artists. For example, I believe that if you bought a Diego Rivera that's in Mexico, it would have to stay in Mexico, right? I'm sure that affects the prices of the works that are in Mexico if it's not a Mexican national looking. I'm just using that as like one example, but I know there are other cases, where a country can step in and basically say, you can't sell this work, it's of national significance. I mean, if that breaks off a sale, of course it affects the sale. It won't affect the prices of artworks for that artist that are being sold in free circulation, right? So Diego Rivera, an incredible Diego Rivera that's being sold in New York and can be exported anywhere, would still make, the price it's supposed to make. But if it's a work that has conditions tied to it that you can't take it out of the country, naturally, yes, that would be an issue.
Interesting. Sorry. I have another question from JB, who says, it seems that people who buy Masterworks shares are not quote unquote collectors, but instead true investors. Is this a fair characterization of Masterworks' model?
Yes, we are providing effectively almost everyone who joins the platform, we are providing them with their first foray into the art world. We're effectively teaching them everything to the best of our ability, what we know about the art market. We're functioning as, almost like effectively an art advisor to people who have never done anything in the art market before.
Well, yes, it seems to me that lots of people who, lots of art fans will love to come into the Masterworks market because they want to, they want to invest money in an asset, that they know about. But it seems also to me that many of the people buying Masterworks shares will be people who don't know anything about art and will be following these, sort of opinions from their advisors to diversify their portfolio by buying cryptocurrency, by buying art shares, as these things become sort of much more accessible for, people wanting to build out their portfolio.
Yeah, I mean, I think that's why we've been successful is most of the time that you see art startups, they're targeted towards art collectors. And I would almost think of that as like an inward focus on the art market, right? And we've gone the other way. We've basically said, what product can we make that's potentially interesting to everybody, not just the existing universe of, the art market, the art world is fairly small. And I think I personally, have seen some of the people who have invested with us, definitely their interest in art overall has grown. And I think, it would be really exciting if a few more people started collecting art as a result of investing with us.
I have another question from Owen Green, who asked, um, you said that the majority of works acquired will be held in tax advantageous depots. Do you think the inability to show the work will hamper its long-term value?
No, I mean, we don't have an inability to show it. And sometimes having a work too available is counterproductive. Like, unless it's hanging next to the Mona Lisa at the Louvre, right? It's not, you know, you need the work to be in the right shows. You don't need a work to be hanging on public view for it to appreciate value.
Mhm. So you see a lot of situations where showing the art can negatively affect its value over time.
So in the art market, there is a concept of a work being shopped or not fresh. And so what, the art market loves is a work that's been in a collection for 30 years, just reappearing for the first time. And, people are seeing it for the first time again in the art market.
Mm-hmm.
I think that's often anecdotally, that's the case. I think things are changing a little bit because we're moving away from, I'd say a kind of an old school purist approach to collecting as a whole. But yes, there's no reason why the works being stored currently would affect their resale value in the future. In fact, it might. And the thing is that people don't realize is that a lot of collectors already store their artworks. They often either rotate them or they bought something that's really expensive. True story, it's going on a yacht. They don't want it to get damaged. Having something on a boat is quite risky for a number of reasons, least of all, the weather. And they basically have a reproduction, have the real thing in storage. So most works that are sold at auction, don't go into museums, and then when they're resold, they appreciate. So yes, long-winded answer, but it certainly doesn't hamper the future results.
Yes, it's a concern, I think, for a lot of art fans to see art being squirreled away in storage facilities and not being shown. But I understand that it would also be a very negative thing for, investors not to, receive any return on their investment for the reasons you mentioned.
Yeah, I mean, we like I said, are loaning certain works out. We're working on, a long-term, larger loan project, but it's not, for a new business, you sometimes want to focus on what's really essential to making that business successful. And for us right now, it's acquiring really great pieces and growing our investor base.
Mm-hmm.
And I think long-term, how we're going to display the collection is more of a long-term question than, something we're working on today.
Mm-hmm. So yes, obviously, Masterworks, this is a nascent industry, young company, new concept. What do you think what does Masterworks look like going into the future? And what are the plans of Masterworks to build the business and bring art investment to, a less wealthy investor in the future?
Wonderful question. It's hard to say for a startup. Things change very quickly, but we are now in a place where we've found product market fit. I think, COVID, for better or for worse, gave us some very serious tailwinds. People are concerned about inflation. People who are more inclined to save and invest money, and have been working remotely and are, often have more cash on hand or holding more cash, and are interested in diversifying their portfolios. And so we've really basically grown 10x between December 2019 and December 2020. And I think, for 2021, it's a matter of continuing to grow and continuing to, really educate people on the asset class and make sure that They know that Masterworks is really the best in class option to invest in art as, you know, a non-collector.
Fantastic. Thank you so much. I think we'll let you go.
My
So I'll
pleasure.
go ahead and
Thank you
stop
so
the
much for
recording.
having me.